the speculative return tends to be an average of zero. Hello everyone. Today I would like to share some of my investment strategies. When you go to work, when you enter your career, one of the decisions you have to quickly make was about your investment, which is because after when you enter your career, your salary starts to have a big bump compared to when you were a student, for example. So what should you do with your investment? Well, you may not have a lot of choices in your 401k, which believe me is a good thing, but outside of your retirement funds, there are so many financial products. They're just like booming flowers on the mountains. When you are amazed by how many different kinds there are, you start to wonder, what should myself do? On the other hand, there are also various financial advisors. They're eager to do business with you, especially when you know you have a very good income. Warren Buffett, who is the Oracle of Omaha in investment, once said, "Successful investment is simple but not easy." Jack Bogle, who is the founder of Vanguard and the creator of Index Fund, once said, "The stock market return must match the total business gains over the years." If we assume the stock market return is at a fixed percent over the years, then if one of the investors has a higher stock market return in 1 year, that means another one of our fellow investors will suffer a return shortfall of the same amount. Under this situation, if we cannot always be the lucky ones as an ordinary person, what should we do under this fast-changing stock market? In my view, the stock market is a representation of people's perceived value of a corporate. Because it is a perceived value, those perceptions can be very subjective. Some people think Tesla may be more valuable than a lot of the S&P 500 companies. Well, other people may think with the current really high oil prices, more than $100 per barrel, the old energy companies like ExxonMobil and Chevron's heyday will come soon. Both of these perceptions could be reasonable to some extent, but even the most knowledgeable person, they do not have the ability to go to the future and come back to pick the right investment strategy. To some extent, when we enter the stock market, we all need to leave ourselves to the risk of uncertainty. Now I want to show some plots. First, let's look at the cumulative investment return and the total market return in the past century. If we invest $1, we're going to get more than $10,000 after a century. The stock market is the annual dividend yield plus the annual rate of earnings growth. We can find that although there are fluctuating periods, both the trends and the value in the long term are closely following each other. The annual growth is about 9%, which is not bad. If we read some investment books, a term called speculative market return could be frequently mentioned. The speculative market return is associated with people's emotional change and people's expectations, which is very subjective rather than the real profits and real market gains. In this situation, although there are sometimes the speculative return inside 1 year could be higher than the rest of the year, over the time in the long term, the speculative return tends to be an average of zero, which is very low compared to the total stock market return. This is because the speculative market return does not have real profits to support its annual growth. One example I would like to mention here is the Nikola stock price. When the Nikola stock first on the stock market, people were very excited about the zero emission vehicle and think this must represent the future of clean vehicles and rushed to buy the stock market thinking this would be the next Tesla. But without the real ability to deliver zero emission vehicles and no profits, this didn't last long. The stock price of Nikola quickly collapsed to only about $7 per share because there is no real profits to support its growth. This is just my investment Strategy number 1, I'm a believer of value investment, which I believe capturing the total stock market return in the long run is going to be much better than short-term speculations. Benjamin Graham once mentioned, capturing the stock market total return is relatively easy, while it's very difficult to surpass it. I agree with this phrase, and I also think let's be calm and capture the real value in the stock market instead of rushing to buy the stocks, which might be the most popular one right now because no one knows what will happen to the future. Thank you very much. If you love my video, please come and subscribe my channel and give me a thumb up.